to talk about. Before we get started, options involve substantial risk and are not suitable for all investors. Tradespoon and myself are not investment advisors, not registered with the SEC, not registered with FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. Remember that the information in this presentation is for education and information purposes only and should not be considered trading advice. Either or both the presenter of this video, myself, Keith Harwood, or the team at Tradespoon may have a financial interest in the securities presented and the trade ideas, so keep that in mind as you evaluate your own personal trading decisions. And with that, we got a little bit of a pullback this morning, a couple of interesting earnings overnight. I think the most interesting right now is probably, for me, Texas Instruments. Coke a little bit weak, Boston Scientific a bit weak. Boeing was kind of a non-event. We'll see if that changes throughout the day. Fight or flight response is going to be in question today. So we had a pullback on Monday, a recovery on Tuesday, a little bit of a pullback today. Very choppy markets, as I think the market is trying to decide if we want to go full risk on or wait for more information. And that information has dates to it. You know, we've got non-farm payrolls, we've got an election, we've got a Fed decision. All of these inputs will seem to be getting a little bit clearer. Speak to political bias of any sort here, but the last I saw, it looked like Trump was up to 64% odds of winning the presidential election. We'll see if that continues to drift in his favor or if it starts to go back towards a coin flip. We will just have to see how that goes. But the more and more certain it gets, there will be some concern over the tail risk, but I believe that is going to be more focused on sector rotation. Usually after an election is completed, we have seen the market go higher, whether a Democrat or a Republican wins, at least recently, a bit higher, and then a grind higher into the end of the year. But you never know what's going to happen. Maybe we get a different type of maneuver this year. So we'll be watching that. We'll be watching some of the sector rotation once that election result is completed. You know, I remember very clearly with when Biden won, we did have a very firm oil market for months after the election. So we'll just see how things go here. We should see some shifts and, like I said, sector rotation, but I'm not sure that it can be catastrophic for the market since we're pretty much going to be still looking at standstill with a split House, Senate, presidential seat. It's not like we've got a sweep by Republicans or Democrats expected. So overall, right now, though, the market is consolidating and we're playing out some of these earnings. We've got a handful of big ones, I think, in the next 24 hours here. We've got Tesla after the close today, looks particularly interesting. We also have to look at IBM. Las Vegas Sands could be interesting to look at, given that it did have a bit of a rally, and it's the first big casino that I've seen come out for earnings. So we'll see on that. We've got UPS tomorrow morning. You know, shipping is often considered, you know, these delivery services, UPS and FedEx, are often considered to be a big sign of what the economic situation is going to be. American Airlines tomorrow morning, last two of the airline or big airlines, American and Southwest, UNP. So we've got some interesting earnings. I think they're going to be interesting, have an impact on the broad market as well as their own independent maneuvering. But three or four of them look pretty good from both a combination of the technicals and the earnings analysis, in addition to some of the options open interest analysis. So we'll take a look at that a little closer, as I said, to see if this fight or flight response can generate a clearer overall market signal. Probability of success and return on capital. So things like credit spreads or in-the-money debit spreads can have a higher probability of success, especially given current market conditions. But it's going to be a lot that looks like it's got a good directional bias that can increase the return on capital, but it will generally reduce the probability of success. That's the trade-off that we're always looking at. If long the market, be wary or be aware of the portfolio drawdown risk and managing those entries and exits. We don't have a very clear trend change, but it is starting to look like the pullback right now is in place to a certain extent. You know, we've been doing a series of lower highs and lower lows, even within the chop. So keep that in the back of your mind as you're looking at some of these broad market type trades. Long short the market at the same time can be beneficial, particularly given what we're seeing now, where we're getting some profit taking in some of the better trades, and we're seeing a little bit of pullback in some of the earnings names. All right. End of day to make trades is definitely something that I am a fan of, especially right now in the active trader names. We had 3 signals today: Dropbox, FTMT, and Synchrony Financial, and I'll take a look at those with you guys today as well. All right. Earnings dates, of course, we're right in the swing of things here with earnings. We've got some big ones next week. That's going to be a big one for the market on the whole. And avoiding that chase trade or revenge trade. I think that's actually right now also pretty important with, you mentioned gold and silver, Bob. I'm a little bit worried about gold and silver coming back right now. I'm looking at some potential bearish entries. I know that right now the trend is higher, so I'm very, very flexible with this. And I'm very, very hesitant to jump into it just because of the way that it's moved so far. But I am starting to see some signs that we may be ready for a pullback there. It may not go bearish, but a pullback seems like it may be coming. So keep that in mind as well. And we, as you guys know, we don't like to call the bottom. So look for those signs of that bottoming process and what can generate a recovery in stocks that are at seemingly low valuations. Before the markets, so I'll touch on why in gold and silver in a few minutes here. I want to just do bond yields first. So bond yields rising, seeing that it can be a potential red flag for precious metals. We're still under that 4.3 level or 1.2-ish level here. Overall bonds continuing firm is starting to give a potential concern for, I think, the equity markets. What else can I look at on the bar chart before the market opens? Let's go to Bitcoin. And Bitcoin down about $1,000 today. So we're seeing a little bit of risk off in Bitcoin as well. It had the breakout, got to a high, and now starting to pull back. So seeing that is also, I think, just goes with the flow with the potential for some tech pullback. Maybe people just taking some positioning off before some of the bigger tech earnings. And then USD JPY is one of the things I look at a lot when I'm looking at precious metals in particular. So up almost $2 today, almost like a bullish trend. And usually when we see a bullish trend in the dollar relative to the yen, that is bearish for precious metals. Hasn't been the case recently. We continue to have that money float on $1 today after a $2.71 rally yesterday. 253.93 was yesterday's close. I don't know why it's not showing yesterday's chart on here, so I'll go back to bar chart. Let's pull up GLD. So up 271 yesterday, coming back a little bit today. We did have a breakout yesterday, as you mentioned. If we end up getting back here towards 253, I think that starts to show signs of a short-term top, maybe pull back towards 247. So it's not a huge downside. Might even get down here towards 245. If the dollar just continues to be firm like this, that is usually, and it's not always, like I said, it's usually a bad sign for the precious metals. Okay. And we're seeing DXY very similar to dollar yen. We're also seeing oil pulling back this morning after a spike yesterday. So commodity inflows do seem to be slowing down right now. And this is where I get a little bit nervous here, is if I start to see the commodity inflows slowing, it starts to look like profit taking potential for pullbacks here. SLV as well. You see that it is, I had the just insanely aggressive buying here the last 3 days. And now today, getting that first sign of a pullback. If we start to see that get a little bit more aggressive, yesterday's low was 31.24 in SLV. So during the session, we are below that level. Everybody that bought in during the US session yesterday is currently down small on their position. If you look at the futures, pull up the December future so you can see it on the ranges for the full session. The big level here is going to be 33.97, so about 20 cents away for SLB. If we get down below 32.90, that means 30.90 in SLB. That could, below 30.90 in SLB. I think that could start to create some liquidation risk down towards 29.5. All right, so it's not that I'm long-term bearish precious metals. I'm just seeing a lot of signs of things that normally lead to some pullback in precious metals, and it's not having it. So it's nice to see that they're continuing firmer in spite of all the bearish inputs, the bearish correlation-based inputs. But we are now overbought. If I look at it back to, say, here in May, we had a spike like this and then a pullback to the 10-day moving average and then a lot more chop. Today, we've got that similar sort of spike. And I would, like I said, I would not be surprised to see 29.40 GLD when it spiked up last. Let's get there. We had a move to above 70 RSI that then led to some consolidation and some pullback. So I don't know that I would want to be necessarily like long the 260 calls or 255 calls here. If I'm looking for a long position, I think an in-the-money debit spread might make more sense. It allows me to effectively say, even if we pull back, we're not going to pull back too aggressively. In that case, it would be something like a 240, 245 call spread for GLD. And we do have implied volatility near the highs of the range, while realized volatility has been low in spite of this bullish trend. So I'm thinking that, if I wanted to be long, I'd look for an in-the-money call spread with, maybe an October 30th expiration if from a 250, like with a hold up above 250. If I need to trade it down to 245 for that ultimate support level, I have to go in order to get enough premium to justify, the long 240, 245 call spread is synthetically short the 240, 245 put spread. So it's not a huge leverage trade for 20. Now that we've got a down 80 cent move, maybe it gets down to about $4. And if it gets down to $4, that could be, now that we're open, this is the new market. So yeah, about $4.20 for that. And it's literally kind of looking for a 10% return in that type of trade right now. So just thinking that we may be getting here close to a short-term top, 10, maybe even 20-day moving average would be in target for me. And the way I'm looking to play it would be more of a put vertical, using some of these shorter term, fewer input days. I don't know that I want to take the risk of non-farm payrolls. So maybe going as short as October 30th, it's only a 1 week trade then, and buying something like a 253, 248 put spread for $1.40. That could then give me a 2 to 3x return on my money if we get the pullback. If we don't now, it's a medium probability of success, decent return on capital for the bear, a medium probability of success, low return on capital for the bull. That's how I'm looking at the goal. And, we're not seeing anything following through for like FXI. FXI is sitting here, a little bit of a bounce, normalization of that gold and silver. I get that we had the big spike in FXI without silver and gold playing along, but they've now spiked up some. They should not probably do a similar move to FXI, but I'm just seeing some term top, okay? And good luck on the move, Bob, before I get to more trading thoughts. But here, yeah, so gold and silver are really kind of my concern points there. BSX down today. So it was relentless, and then the earnings seems to be, it was looking pretty good for like a little dip and buy, and then dip, and then earnings pulls us right back down to the range. So the support may be here at 85-ish, the previous high. But their earnings just disappointed a little bit. We'll see if this can hold. If not, I would bet on BSX continuing down much lower than that. So we may be starting to get close to an in-the-money call spread type trade for that. This implied volatility should collapse down towards 23, maybe 22% today. And then that starts to set up maybe a little bit more of a better leverage trade. But right now, with implied volatility high and then the money call spread could be interesting near the end of the day. If this starts to collapse and really push through 83, if we get follow through selling intraday, then I can start to look at a put or a put spread depending upon what the implied volatility does. Let's go broad market. SPY, like I mentioned, yesterday's high was 584.5. The prior day 84.85. The prior day 85.39. So we are 3 straight lower high, lower low. Today so far an inside day. If we get below 580.38, so another dollar down, that does set us up to test 575. Ultimately, 565 is the bigger support level for me in SPY. It was the low in October. It was the high in August. So looking for that as a bigger support level, but 575 should provide at least some signs of support if we do continue lower. If we just have an inside day today, that may mean that this is all the dip we've got. We have had general buyers of the market during the U.S. session, so I got to watch for that today. But right now, showing some early signs of weakness, not liquidation yet, but just, I think, profit taking that has gotten a little bit more aggressive over the last couple of days, but not crazy aggressive by any means. We are seeing in the skew, that's not a dollar sign. Let's click it today. So people may be buying a few puts, but generally speaking, what we've been seeing is buyers of put spreads as opposed to puts. The VIX staying low, indicating that people are not just buying outright puts, they're buying put spreads, maybe even ratio put spreads, looking for a dip, but not a collapse. If we start to show signs of a collapse, that could actually create more momentum to the downside. Because if I'm on a put spread and we start going through my strikes, and that's as a hedge, my hedge is stopping making money. So now I either have to roll my put spread into more lower strike put spreads or outright puts in order to have a hedge, and or I have to liquidate my stock position and take the profits on my put spread. So we'll see how the market reacts if we do get that kind of pullback. But right now, there are signs of, I don't want to call them major red flags, but like a yellow flag, slow, and start to think about whether, what levels we can breach that could cause a bigger pullback. And right now, I don't see a big pullback. And I'll say that again. I don't see a big pullback. I just see little dips overall. Tech, right now, we had the outside day yesterday. We close above the high. The close was 596. Yeah, so we closed just below Monday's high in tech. So tech is consolidating more cleanly. Their earnings are, the big earnings for tech start, well, we've got Tesla Day, we got Apple on the 31st, Amazon on the 31st. We had we had Netflix, and that was positive earnings. Meta is on the 30th. So next week's a really big week for tech earnings with some of these bigger, big names. We do know that NVIDIA tends to be a late one, November 20th, and it's pulling back today. Semiconductors were, generally not particularly strong. NVIDIA seems to be best in class still. But we're seeing, again, semiconductor pullback today outside of Texas Instruments, which had positive earnings. So mixed signals here, right? We're seeing positive earnings out of Texas Instruments. We're seeing weak earnings out of some of the other names. It's very much a mixed bag. GE, poor earnings. GM had good earnings. All in all, a very mixed bag. Lockheed Martin bouncing back after poor earnings. Raytheon had good earnings, and then sellers off of the Lockheed Martin follow through today, kind of consolidating their highs. I am also kind of getting more intrigued here by Raytheon as a note, because Raytheon is still the better performer on earnings, and it seems like it got pulled back more by Lockheed Martin than its own independent fundamentals. So if the technical buying and the investor community starts to push this back above 127, then it starts to look like that bull trend is going to still be in place for Raytheon. And I'll touch on Walmart. It was one I had talked about yesterday at the close, Bob, but with the move, I know you gotta get that move going. So the thought for me on Walmart was that with its announcement that it's going to, the market reacted positively to Walmart. It's breaking out. It's setting up for another run here. It looks very good to me. I like Walmart a lot here. Even if we only get to say 85 or 86, the at the money 82 calls in November were about $2 yesterday. What are they up to now? Probably slightly higher. Yeah, 220 now. So just getting into some of these, or even, if I wanted to reduce my cost and play for this grind higher, the 82, 85 call spread, since we don't have a big push going to lower my capital outlay from $200 or $220 down to about $140 per contract, and know that if we stay below 86 and a half, that I feel pretty good about that. So more of a trending move. Implied volatility is slightly elevated for November options. Normally see, so we are seeing a slight elevated implied volatility, but we do look like we may be getting ready for another trending type move that could generate over the course of a month. And that can easily turn into decent profit if that happens. Okay. And since I mentioned Walgreens, I'll just pull up their chart, just drifting back down here. There should be support here at 930, the pre-earnings level high, but I'm not sure it's going to be there. Frankly, it just seems like Walgreens may have gotten that final nail in its coffin with Walmart's announcement. I don't think anybody's going to be too excited about jumping into Walgreens right now. CVS also got hit and looks very questionable here. We've got some support at 55 and a half, 50 by 70 technically, so we're about $1.20 away. Can it hold? I wouldn't be so sure. And then you mentioned Etsy. Little bounce back today, but looks like it's going to want to test this 48 and a half level, see if that can hold. These stocks that just generally seem like they should go down often, unfortunately for them, do go down. I mean, Snap, terrible earnings, started to bounce back. It's got their earnings next week as well. This is a big mover, so this is one that I definitely want to be on the watch for next week's earnings announcement. Maybe this is going to be that earnings that really pushes it even lower here. So, is that Pulte Homes you're looking for? PHA or PHM? Sorry. Yeah, Pulte had poor earnings, pulling down XHB. Can't say for sure if this is going to be a good entry or really just a sign that things are not going great. DHI has their earnings next week. Maybe they can help this recover. KV Homes had their earnings and they were weak. So maybe home builders on the whole look a little weak, especially with interest rates rising. So with interest rates rising, rates are going to be rising as well, and that's going to create some potential problems for home builders. So we'll have to see how this all plays out, but the higher bond yield is not necessarily a good thing for that's a potential buying opportunity. But for me right now, this looks a little dicey. Not finding clear support here, and it's not clearly holding. The 50-day moving average, the price level 112 could be support in XHP, but that's 5.5% is a pretty decent pullback in XHB. So I'd rather wait for now on those. Right now, it's a question mark there. Oh yeah, Save. I'll pull that one up. That's the big winner for the morning, up 60 cents, 30%. I've seen this enough times, like you said here with Chesapeake. Starts to spike when they're talking about when that was getting restructured and everything else, but the stock ended up worth nothing. So if we do a restructuring for Spirit Airlines, I gotta think that this is going to zero, but there's not much for me and my trading style to trade off of here. The market is pricing in that serious potential for, a zero out of this. 65 cents for the $2 puts. Incredibly high implied volatility. It's a, the market's pricing in this sort of binary situation of it potentially having a small amount of value in a takeover or potentially going to zero. So we'll just kind of have to watch that one, I think. It could have an impact on Frontier, which is bouncing back a little bit here. ALGT, Bob, your previous, I'm looking for a bull flag here, or it seems like we're getting close to that level. So if we start to see a bull flag, that could be a good setup for a next leg higher there. And kind of chopping here, a little bit weak. SMH is showing those lower highs and lower lows. Yesterday we actually had an inside day, but today we've made a new low here. 247 maybe in sight here, but until we start to see a little bit more out of earnings, maybe AMD earnings can give us a leg up or down, give us a little more clarity. Right now, tech feels like wait and see, which is what the market seems to be doing with this consolidation period. IWM, relatively weak as we've pulled back. We didn't quite make a new high on this last move, even with the financials looking good. It just seems like right now the market is almost on pause, and that means mid-range instead of the high end of the range, maybe a destination point. We're there in IWM, we're kind of there in Qs. A little more pullback potentially in SPY to get to mid-range. But overall, a lot of this stuff just looks very blah. XLU is firm. NEE had earnings up 60 cents now. So right on the open, it was up almost $2, pulled back a little bit here. Let's watch how that behaves throughout the day. If there's more buying into NEE, that could help set up some of these others like Duke and set up a bullish case for XLU. But right now, I think the market again is looking for like earnings clarity here, and we've got the biggest one for XLU, which was NEE, out of the way. Now let's see how some of the others come through, and if it's going to be like XLF where they all perform well, or it's just a mixed bag. Speaking of XLF, we are finding some support here. I like the way that this chart is setting up for that bull flag. Yesterday's high 47.23, today 47.22. So we're about a dime away from yesterday's high. If we see some buying into financials, looking at JP Morgan set up for the next breakout there, that could be interesting. Wells Fargo just strong again today. So kind of looking for some of the ones that had better earnings as a potential leader out of this little dip here. Goldman, always loved in when financials are doing well. Morgan Stanley doing well. Bank of America looking like it wants to set up a bull flag here. Citigroup was the bad one. Had the biggest bounce back yesterday. Maybe that can get back up to 66 or 67. There are a lot of different ways to play all of these different financials, but I'd be looking. I can just show you the implied volatility in Citigroup. We're not down at the lows, the 22% kind of levels. We're at 29, 30%. The pre-earning volatility seems like it should be coming down a lot more aggressively than it has. It's more of a call vertical, especially in names like Citigroup that have clearer resistance up above the market, around 67, 67 and a half. So, looking out to like a November call spread, targeting 67. I already have some of this on with like a 65, 67 and a half call spread. I might even say go wider. 62 and a half, 67 and a half call spread for $1.79 is not terrible, but I prefer some of the names that are a little bit stronger in general. The Bank of America's, the Wells Fargo's, the JP Morgan's for that potential entry. Oh yeah, I'll touch on that position. So uranium pulling back again today. So testing the lows, but getting buyers through the trading, through the morning at least. We'll see if that continues. Yesterday we had weakness, and then we had a nice recovery into the close. CCJ, we had a lot more weakness and recovery through the afternoon. It looks a little weak, but again, it's more about finding that support level that should be around 55. And the moved a ton. It looks like there was a little bit closing in the 60-65 call spread yesterday. But I believe, based upon the open interest, I mean, he had been long the 55-60 call spread and short the 60-65 call spread on like a 60-65 call spread. So the bigger player here more. I am still holding my position in part because of my issues with my brokerage firm where they still haven't resolved stuff. I'm hoping that can get done today, but their trading is just all screwed up with Trader right now, and I'm okay with the position. If I wasn't, I would be calling them to close. I'm okay with letting this ride, especially as we are seeing bounce back. All right. Let's do the 3 active trader ideas for today, and then I will switch to earnings. Dropbox, if we hang here around 26 and change throughout the day, so I'm not looking, if we get up towards like 26.60, it may be a bit too much, but if we stay here, just a very simple November 26 call. It's around $1.25 right now. In the next week, maybe we can see back towards 27, back towards the highs. It's been trending higher nicely. We have earnings in a couple of weeks. That'll start to get more in focus next week. So for a 1 week hold, though, this does not look bad right now. Overall, these dips have been buying opportunities, and a 1 week hold on some 26 calls for November looks attractive. FTNT, ultimately 83.74, or what was the high, or 83.77 should be some resistance. But again, as long as we stay in this range, this has been trending higher reasonably. We don't have to worry about that wiping out the position, and looking at something right at the money, 81 or 82 calls. And then finally, Synchrony Financial, speaking of financials, this, again, looking for sort of a bull flag type setup where our pulling back to the 10-day moving average. If it pulls back too much today and gets hit down here towards 54.75, I wouldn't be looking to enter, at least not today. But if we can stay within yesterday's range, or be within yesterday's range by the close, then that could be an interesting position looking at the November 55 calls. All right, earnings are already done, so that's not going to impact it. But if we do continue to have 10-year yields rising, it seems like the market right now is playing that rising yields could be an impact negatively on the financials. All right, so yeah, that's kind of the setup right now. Dropbox, Fortinet, and SYF staying close to where they're at right now is a good thing. If we get a whole big rally through the market, those may run too much, but I like to wait till the end of the day to see how the market handles it. If SYF looks the most vulnerable right now, if that does pull back further, that would be a definite hold off on today. But the rest, the Dropbox and the Fortinet could be interesting still. Let's go to earnings. Tesla, we broke below the 100-day moving average slightly. But obviously earnings is going to be the key here. If earnings comes in weak, where can we go down to? Can we get down to 180? Maybe. That would be a big move for Tesla historically on earnings. We've normally seen about 11% moves, maybe 12. All in all, the market seems to be pricing in a lot less movement than it should. The last 7 earnings have all been at least 9%, and we are pricing in a move of 6%. Maybe this is going to be finally the outlier with limited movement. I tend to believe that I'm going to use the past to say that this is pricing in too small of a move potential. 12% is about $25. That would put us right down to 192. So between 192 right here, it's roughly the low outside of August 5th. It's 192. That looks like a good level here. It was right in line with the highs in June. There should be some volume around there in that 190 to 195 range. On the upside, if we get 12% again, that's $25. So we'd be looking at 240 to 245. And right here, there should be some volume right in that range, 240 to 245. So with all that in mind, I mean, I gotta believe that Tesla could be an interesting play here for, targeting maybe even one. This is a cheap way to play Tesla, something like a 200, 190, 180 put fly. The big open interest is at 200. We may end up stalling there, but I mean, given the normal size move, 195 would be a more likely target. And if we can get through 200, that may end up helping us push down to 200 to 190. So, like a 200, 190, 180 put fly goes for about 65 cents. And then on the call side, I'd be looking for maybe go for the 245 target, even though 240 has bigger open interest, go 235, 245, 255. Because if we do have bullish earnings out of their Tesla stock, so we may just get a bigger follow through on the upside and try to push back up towards 260. We had bearish earnings last time, surprise, maybe that much more surprising. So, the double fly though is a way to potentially play out Tesla, and I think that could be interesting. All right. I don't see a clear trade on these, but I am going to just highlight them for you guys for the after the close stuff. LRCX. We are very close to support. I don't know what the downside risk really is for LRCX if it does have bad earnings. That makes it a little bit harder to do anything here. We have had ranges from 2% to 10%, so kind of all over the place in the move. Downside support doesn't really exist after about I guess it is 2% move. Upside resistance may look more like 84 to 85, and that's way more than the normal move in LRCX. I just don't see a clear earnings trade there. IBM earnings today, their normal move is about 4.5%, and we're pricing more. We're pricing 6% this time. So with the elevated pricing, it's a little harder to predict this again, especially given that we've had ranges from 2 to 10% on the move. A natural support level could, on a technical basis, could be 224. It's about 3%. Natural resistance could be around 238, again, around 3%. But the market's pricing in much more than that. So this may actually be more of a selling an iron condor, selling a put spread, and selling an out of money put spread and selling an out of money call spread. Given that we're really just, but again, not a very clear one. I'm not even going to bother with just note Immerse because we have Verizon earnings already. Their earnings are today after the close. This is usually priced for about 3% and usually gets a lot lower. We've had some almost nothing moves. We've had some 4% moves. We even had 7.5% move. I'd be inclined to think that this is looking for, again, it's just not a great looking trade for me. More of just information to the market. Las Vegas Sands did have a big run off of when China was getting all of its buying, and this could be a bigger mover on earnings than expected. And the market right now is pricing in around 4%, 5%. I think that is reasonable to expect a bit more of a move. On a technical basis, maybe we start to see some support here around 47, $4.50 down, resistance around 54.5. So we got like $3 upside and maybe as much as maybe $5 of downside. And, just the options don't give me a clear target. We're very spread on the open interest from 52 up to 56. On the downside, we've really only got open interest at 51 and 50. I don't have a natural pinpoint for a put fly, and the implied volatility is a little high for just buying outright options. But tomorrow morning, I think we have better setups. UPS, we had the big break last earnings cycle. If we surprise with potential for a larger move. So market's pricing in 5.3%. Normal has been 5.3%. Normal has been bearish, and the bigger move has been bearish. 5% is about $6.50. $6.50 to the upside would be, we'll call it 138. We have some resistance at 137. Maybe we can get up to the highs of this range, 139, 140 range. So if I can get 140 on the upside, I'd have to look to 124 on the downside. And 124 is right in line with the lows outside of this little dip in August. So I think there could be something here. The market seems to be pricing in 126 for the downside, $5.50. The symmetrical would be 137. They're not pricing in for that. 140 does have some open interest here, as does 142. But I think I'd be looking at like a 135, 140, 145 call fly versus a, call it 129, 124, 119 there, but it's because I'm looking to target a fairly symmetrical move of about direction. All right. So that's UPS for me. I think that one could be interesting. American, I touched on this yesterday. The earnings right now look underpriced. We've normally had small moves, only 2%, 5% implied is the normal implied, and we are implying 6%. So we're implying larger than normal move. But let's look at the size of the move for UAL. It was about 2.5 times the normal move to the upside delta. Actually, it was a pretty muted move, I guess, on earnings. I thought that they had a bigger move than that on their earnings. I guess they just followed through with United. But if we do see some bullishness off of American Airlines earnings, we do break out above 13.23 pretty naturally and go towards 14. If American Airlines surprises to the downside, a dollar downside. So we're looking at least $1 either direction, in my opinion. So it's close. I don't want to sell the 14 call for 11 cents. It's just too little. For this stock, I would actually just be saying to myself, I need to trade it based upon the concept that if it comes out bullish, I want the bullish position, and I'm only taking one side or the other. I'm not looking to do both the bullish and the bearish. I just take the directional move in smaller size and know that if I go bullish, if it goes down, I'm going to lose my money. If it goes up, I'm going to make my money. All right. So it's a little bit of a coin flip there, but a coin flip with 2.5 or 3 to 1 kind of payout if I buy these October 13 calls seems attractive to me. So if we have a muted upside response, I'm going to be a little bit surprised here, and I'm going to take a small profit. A muted downside response, I'll be surprised and take a bigger loss. But I think that this is set up for a potential for a little bit of follow through based upon the other earnings already. Love, my targets would be really just back to the highs and lows. We normally see about 4-ish%, anywhere between 3 and 5. So call it 5%, it's $1.50. That's 32. The previous high is just over 32. The downside to 29 lines up perfectly with this 200-day moving average in the middle of this range from September. So if I'm looking for a $1.50 move, it's a bunch of tight trades here, like 31, 32, 33 call fly versus the 30, 29, 28 put fly. Plus the put fly. But I could make a little bit of money doing something like that. If the put fly can be done for 15-ish cents, and the call fly can be done for 15-ish cents. That's 30 cents for the dollar wide flies. It's okay. It's not a home run, but that's not bad on earnings. Union Pacific looks a little more intriguing here from an earnings perspective. Support at 235, and the earnings analysis shows that we normally move about 3%. 3% is about $7. $7 puts us at 235. So then to the upside, it'd be 249, maybe 250. And right here we got 249, 250. So the October high, 250. The October low, 235. Seems like we've got some pretty clear technical levels there. There is some open interest down to 235. There is some open interest up to 250. It's not huge. We did have 700 of these calls trade today on the 252.5. Looks like it was a buyer. So somebody's bullish on this earnings. But a 245, 250, 255 call fly plus a 240, 235, 230 put fly. Again, could be on the interest side here of something for around 70 cents on the put fly, 240, 60, maybe 90 cents on the call fly. So, let me double check that map. 240, 60, yeah, 90 cents on the call fly, 90 cents on the put fly, about $1.80 for the double fly. I would love to be able to get it for $1.50, but that doesn't seem like it's going to happen. So, $1.80 though is not bad. It's, again, a decent trade, not a slam dunk, but timing wise, having that Wednesday afternoon or Thursday morning trade, I think can be very intriguing. All right. Let's see what TXN is doing now. Okay, so it's in the range. This is sort of what I was talking about last night as the potential okay scenario for that double fly. You can see the 200, 210, 220 call fly is up to, what's that, about 65 cents. So call it $3. And the put fly is kind of dead. So it's about a break even right now. But if we continue to get a little bit of follow through here, 205 maybe the natural target for expiration. I believe it was 330 yesterday near the close. So right now, basically a walk based trade, but looks like 205 could at least be a decent target for that. And maybe actually looking today to play for a 205 pin absent a position may not be a bad concept for TXN for this week. And then after we see the LRCX earnings and just see some general market flow, I can start looking for whether this can push to new highs. But right now, Texan looks okay. Boeing, a very muted move, very small downside here. We haven't seen a ton of massive moves on the recent trades, so I got to also keep that in mind. We had so many big moves last earnings, and now we're getting a lot more muted responses this earnings cycle. So generally speaking, it looks a little questionable in terms of the butterflies from that perspective. And I knew I wanted to pull up McDonald's. E. coli is a problem, but the market is buying into it again now. I was down a little over 6% pre-market, got down to 290. Just above 290, 290.83, and bounced back now to 297. It's going to be choppy, I expect, for the rest of this week, but looks like somebody came in aggressively buying the bounce back, buying about 5,000 of these $300 calls. Aggressive trading, but it looks like they may be okay with that. Where was the price on this mostly? And actually, the price was a little bit higher, so the guy that got to buy some for $1.50 is feeling pretty good, but looks like the main pricing here was in the 240, about 10%. Not bad for half an hour of work for the people that were buying into those, but I don't expect them to just turn around and flip those out unless we start to see a real run back today, back into the 303 range. So Chipotle, and that's probably off of McDonald's. And I'm seeing support at 56. Maybe some here at 57. This could be a spot for, they got earnings next week. I guess I don't see anything in Chipotle since the earnings are next week. I was thinking that if I could do like a debit call spread here, trading for it not to fall, but 57s are too cheap. I'd have to trade for it to stay above 58, which seems reasonable, but maybe it's better as a non-trade there. Apple pulling back a little bit, and I mentioned they've got earnings next week. I'm sort of surprised to see Micron's general weakness here still. We've tested the 100-day moving average in this 115 range twice. Maybe the next time we get buyers, that can push us through. So I'm still going to watch this for a bull flag. If we get above, with the pullback today, I'm not sure I want to do anything. If we start to recover today and then get maybe some buyers into the 107.5 range tomorrow, I could start looking for playing Micron for a recovery rally. Get above 115 and start pushing towards 125 to 130 range. That could be an interesting one. No, NEE here pulling back a little bit more after earnings, so it's not looking great for utilities, the fact that it couldn't hold the rally. Silver and gold falling a little further here. So this is getting into that point where it looks weak to drop back down to maybe another $1 in silver. So definite concern there. Oil, though, bounced back. So USO that had been weak is bouncing back to almost unchanged. We're seeing some buying in OIH. Finally, the bounce back I thought would have had a little bit more buying into it. You can see XLE is held up okay, but not bounced. OIH continues to drift lower. It makes me that much more intrigued by the ExxonMobil trade, though. And I know Vlad added ExxonMobil, and I'm going to look at this one a little bit closer. Potentially look to add something there for a target towards 125. Options are on the high side. We've got earnings in a week. So it may be something that I just can't get a good structure since I don't want to play through earnings. I imagine most of them are around the same time. Yeah, Chevron, same time. Halliburton, a week later, and a weaker chart. Shell, no, all next week. So maybe we just need to get through earnings on energies before I can start going through that sector. On the regional banks, I wanted to note though as well, earnings holding here right at the highs. KeyBank, a little weak on earnings, but holding up okay. Regions Financial seems to be holding up okay here. With Synchrony Financial as the signal, I got to lean towards Synchrony over the others since that was the active trader pick. So it gives me a little bit more confidence in it. But I think that there might be something brewing here in regional banks, looking at some buyers here to start the trading day. All right. I also want to review FedEx. After UPS has their earnings, I wonder if the implied volatility might fall a little bit here in FedEx. And we don't have earnings for FedEx until mid-December. So just getting that input out, I don't think it'll have a big impact on the stock price itself, but it may drop the implied volatility and set me up for something interesting here. The bull flag's not quite there yet, but we did touch the 200-day moving average. The last time we did the 200-day moving average, we kind of pushed through, found support. It looks like right now lows, but not yet seeing higher highs. So I need to see above 277 to get bullish for like a 295, 300 kind of target. But if we get above 271.5, then I do start to get intrigued by FedEx from the long side for sure. Okay. I haven't looked at Google yet. They have earnings next week, so I'll touch on their earnings next week. Okay. Let me get a quick preview on the earnings for tomorrow after the close. Dexcom actually could be interesting. Boyd Gaming could be interesting. So Dexcom and terrible earnings back last quarter, got absolutely annihilated. They are a diabetes stock for those that are not familiar. But a 40% move last earnings really put a lot into question for them. Implied move is the highest it's been, unsurprising. It's a $73 stock. 65 should provide some support. Honestly, I don't know that I see natural resistance. If they have that amazing 1 quarter turnaround with bullish earnings, how high can this go? 80, 85 even to hit the open interest. It's a $8 straddle, so it's priced in pretty right. I think that might be a pass, but tandem diabetes could trade off of it. So you can see, another diabetes-based stock that has just absolutely gotten killed. Wow. It's been a few since I've traded this. Usually the aggressor on this has been a buyer of calls. So there may be something here to run through earnings. There's it seems like one bigger player in this name. And right now he's got some January call spreads and some November calls on. So I'll look at this late next week for maybe jumping in with some calls on this dip for tandem, especially if Dexcom has positive earnings. It just means that there's some interest in the diabetes sector again. So that could be another interesting play on a directional biased trade. So that's about it for now. We've got a pretty slightly weak day today. I'm actually surprised to see NEM bouncing with gold and silver falling. I know they have earnings today after the close, but although it did for NEM in April, 12% in April, that was a big move. Normally at about 3% though. I mean, and if earnings come in weak in spite of the higher gold and silver prices, that's not going to be a good sign for NEM. Could hit XME as well. NEM and GDX. FCX, as a reminder, had earnings and they looked strong and then ended up weak. Nucor had earnings and they looked weak and ended up weaker. So some of these metals names that have had earnings haven't necessarily impressed people so far. I'm going to go back and see if the LMT bounces. Just sitting right now. Okay. So I think as it stands, I'd look for potential entries here in the active trader names. All three still look okay. If Synchrony Financial finishes, in this range today, I think that might actually be the best one to me. And if it ends up weak, then Dropbox starts to look a little bit better. But with Dropbox and Fortinet having their earnings next, in the next 2 weeks, that may slow down any sort of movement because people often don't like to chase new highs right before the earnings. And then on the earnings side, I do really think that Tesla is going to be a wild one. I've been wrong many a time before on wildness, but I think Tesla has some potential for being a big mover down to that either 190 level or up to the 240 level, the $25 move from here. And then AAL, a directional bias. I'll be looking at potentially buying a couple of calls here just on that 13 strike, playing for it to go towards 14 on earnings. So that'll be my play if I can get my brokerage stuff figured out today, ideally. If not, I have to wait another day before I maybe even just close that account and open up a new one somewhere else. Any other stocks you guys are looking at right now? Is anything you guys want me to take a look at? Let me know. Throw them into the questions. I'll hang out for another couple minutes in case anything comes to mind. But right now we're just seeing a reasonably choppy day here. Let me double check for any other bigger moves today. Triple M falling on the day after the bad earnings day. So it was interesting. Triple M had touched the highs, faded back down to the lows of the range, and today continuing down lower. We should be finding some support soon in Triple M. But if we don't, maybe 120 can create some support. I got to wait for that falling knife to bottom out. So thought it was going to be so good yesterday when we were touching on the open new high, and then the market just rejected that entirely. ADSK, yeah, let's take a look at that. Okay, so it pulled through the 10-day moving average, downside target around these prior highs. That was a double top, and then on the third attempt to push through. Earnings at the end of November, so I don't have to worry about that impact. I think a 276 target initially would be my bias for ADSK. Implied volatility is mid-range to the high side, maybe. For like a short-term trade, maybe like a 285, 275 put spread here on November 8th. I'm going to get non-farm payrolls that way. Get, get a little bit of the information out from the global macro perspective if that helps create some broad market weakness. But I don't want to necessarily be just outright buying implied volatility here, especially with some support around 276. So I'd be looking 285, 275 put spread, and then around 276, looking to just change the position, probably take profits on put spread if we break down below that. Then I start looking for the next $10 down to 266. So trading it in like these little $10 increments, much like trading SPY for its $5 to $10 increments of 270 or 575 then 565. All right, I'm opening bell on Wednesday, so I'll do the opening bell again next week on Wednesday, closing bell tomorrow and Friday. Yeah, so John, same kind of thought process, simplification of it with a 287.5 put can make some sense here. And I will say that if I was going to do an outright put option, a slightly in the money put is going to be a little bit better than getting into the out of the money. In order to get a little bit more leverage when I do a put vertical, and then a little further out of the money on the short. But for an outright directional trade, increasing that probability of success by going slightly in the money can help get it over 50% success rate and help the price target. So just watch it closely. If long a put, you can always also rotate into a put vertical if you start to see some support forming, but it still looks bearish. So cool. Very nice though. Good trade. 284.90. What was the low on October 16th? 284.90. Okay, so you're looking there, and then I'm looking down to the 277 range, 276.5 to 277 range is right now we're not showing any signs of that holding yet. But watch the broad market. If Qs find a buyer, that may just give some money flow into ADSK as people just start buying all tech. So that feels like that could be the one hold up for ADSK. But right now, I'm not seeing a lot of buying aggressiveness in Qs. Going down to the 15-minute chart here today. Get a big dip and then a little bit more fall. Yeah, unless we get back up towards unless we get back up towards 493.75 range in QQQ, I'm not seeing any strong sign of any buyers here. And in fact, right now we're getting sellers again. It seems that there are bigger orders coming in on the bear side. Yes, so I won't be on the close today. I'll be on the close tomorrow, but I believe Vlad will have the noon. Hope you have some good trades today. Keep an eye on all those potential trades right now, but this consolidation period can be a little fuzzy at times, but it may switch to a bullish or bearish market like that. So always got to watch. Thanks again, everybody. I will talk to you tomorrow.